Hello and welcome to another update video about Chainlink. In this video, I want to take a look at the long-term chart. This video will be found in the long-term video playlist of our channel. If you don't know about it, we do have a long-term video playlist. I encourage you to take a look at it. People regularly ask for long-term charts. Of course, I don't cover every long-term chart in every video, but we've got plenty of updated long-term charts in this long-term video playlist. Just look for the coin in there that you want to check out. And you can find that all in the long-term video playlist. So what does it mean? We take a look at new all-time high targets. I can't tell you exactly how long it will take to get there. We might have the bear market low in or not. I'm currently leaning to yes, we have, but LINK is especially difficult because we've just been in a sideways range for a year. So I wouldn't be surprised if we make a new low, but in this video we talk exactly about the conditions that need to be met for me to consider new bear market lows here as primary scenario, because eventually, nobody's got a crystal ball. But what we can do, we can identify support with Elliott waves very objectively. We can identify the conditions for the bullish wave count very objectively, and what we then can do is when it breaks this support, we can adjust our view and we have immediately a new trade setup. That's what we can do with Elliott wave. Elliott wave has predictive powers as well, but overall and primarily it should be used, in my opinion, for a tool to measure reward and risk in a very objective way that gives you very objective trade setups, and you can measure your risk very objectively. And that's really the benefit of Elliott wave. Okay, so I've just drawn the Fibonacci levels for a possible third wave, because eventually what I'm looking at here is a wave 1 to the upside that was completed in April 21. That would have been LINK's first major wave 1. Then we've come down in a so-called WXY correction, quite a complex correction in a wave 2 here. And we're now working on a bottom there, obviously. But in the next bull market, in the next bull run, we should rally in a third wave. And I think what many people are interested in, what would be the third wave target in the next bull run? And we can only identify a range here, an ideal range. And let me see, do I need to move that? So let me just double check if I have picked the top correctly. No, not quite. There you go, all the way up to here. And it doesn't need to be super accurate to the cent now, because it will depend to a degree, to a large degree, on the subdivisions as well that the third wave will develop. But this is the range, between $91 roughly and $111. The 1.618 extension to the 200% extension. Now that can easily be broken. Don't tell me whenever we do that, oh, you said we will only get there. No. Don't understand it like that. The third wave needs to be approached with a mentality like it will go higher as long as support is holding. There will be micro support areas along the way that I will update about. But a third wave, this is the ideal range. But in crypto, it often goes above it. Okay, so you cannot say that the third wave will reach only this level. Extensions are very common in crypto, and as long as support holds, you have to expect extensions. So this is sort of a minimum expectation, and then we should get a fourth wave. Now I can really only give you a target as soon as we have a third wave top, but I would say it can go into the range around $50 to $80. And then we should get a fifth wave to the upside. Textbook target here would be the 2.618 extension at $144. But again, that depends a little bit on how high the third wave goes. Okay, now let's take a look at the lower time frame, and here we've got quite a significant change to the wave count. Nothing that would impact the chart immediately, nothing that we haven't really talked about. But what I have done is, due to the latest spike and the sell-off, I have extended the possible triangle count here. So this is the bearish count, the blue one, A, B, C, D, E. It's an Elliott wave triangle that, based on this count, would have completed on the 18th of April. And if this follows through, we could head for $3, roughly into that range. Now, that's quite a significant change, because we previously had the triangle defined a little bit different. We had it sort of stuck here, and then also the wave 4 set here with a breakout to the downside coming. Now, this is still possible, still valid, but less likely in my opinion, given the latest price action. The risk is here that the triangle can easily just have extended for nearly an entire year, and it's just an extended triangle. And if it now follows through to the downside, target range around $3, I would say, yeah. But that's not the count I'm leaning to. It is simply here on the chart as a risk, okay? And it will only become my primary count below $6, because as long as $6 is holding, the orange count, in my opinion, is in control, even though I think here as well, this will probably morph and change a lot. But I'm counting this currently as a 1-2 setup, as a so-called expanded flat pattern, or running flat, where the wave 2, as long as it's holding $6, has a good chance to follow through in a third wave rally. And that would take us out of the range in which Link has been for over a year, and it would break eventually above $9.50. So that sort of perspective I have. I think we are close to a low here, but it can go down all the way to $6. If we break and sustain below 6, then it's the blue count here, this triangle that would break to the downside. Okay, that's my update about Link. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.